Let's go back to the COVID war. Trump called a state of emergency in America on March 13th, Black Friday, 2020. What did he do? Pump trillions of dollars into the economy and force the feds to lower interest rate to zero to artificially boost up the economy. So going back to the markets, I believe he's going to lower interest rates. If he lowers interest rates, the lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go up.
Gold has experienced a year-long rally, fueled by substantial central bank purchases, geopolitical tensions, and declining interest rates. Many analysts expect these factors to persist, with Goldman Sachs projecting that gold prices could reach $3,000 per ounce by the end of 2025. However, this upward trajectory encountered a setback following former President Donald Trump's recent electoral victory. Concerns about his proposed policies, including tariffs and immigration measures, have reignited inflation fears, disrupting gold's momentum. After Trump's win, gold futures fell sharply as the announcement raised U.S. bond yields, the dollar, and stock markets. The 10-year U.S. Treasury yield jumped 17 basis points to a 4-month high of 4.46%, and the U.S. dollar surged 1.6% against a basket of currencies, reaching its highest level in a year. Historically, Trump's policies, focused on tax reforms, trade restrictions, and deregulation, have spurred expectations of higher economic growth and inflation, strengthening the dollar and weighing on gold. Gerald Celente, founder of the Trends Research Institute, predicts that Trump's economic playbook in 2024 will likely mirror his previous term. A vital component of this strategy is lowering interest rates to stimulate markets, a move that could weaken the dollar and boost gold prices. During Trump's 2016 presidency, similar tactics initially caused the dollar to gain, but subsequent rate cuts eroded its value over time. This dynamic creates a complex outlook for gold. On one hand, Trump's push to stimulate economic growth through lower rates could eventually drive gold higher by weakening the dollar. On the other hand, his initial policies and rhetoric have historically caused sharp short-term surges in the dollar, leading to declines in gold prices. The current landscape mirrors past patterns. Central bank buying and geopolitical uncertainty support gold, while the Federal Reserve's anticipated rate cuts add further bullish potential. However, Celente notes that the dollar's recent strength could persist soon, driven by renewed optimism around U.S. economic growth under Trump. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
One of our top trends for 2024, a golden year for gold. Gold was selling then at $2,041 when we made that forecast. So what happened? The wild card was played. Trump came in. We just talked about Ukraine war. There was fear of World War III escalating. Those war fears have calmed down. And Trump's selling the BS too that he's going to stop the Middle East war, the Israel war, which I don't believe he's going to do. But anyway, those fears are calming down. Here's some data. Gold's down 5% since Trump came in. That's exactly in line what happened when he came in 2016. Then it went down almost 12% because he sells the line that it's going to be pro-economy. And the dollar's getting stronger rather than weaker. Silver was down 13% after Trump's 2016 election. So here's the deal as I see it. Trump is going to do everything he can to pump up this economy because all he's interested in is the bottom line, more money for him. And more money for him means a better stock market. And how do you get a better stock market? Let's go back to 2018. I know that's ancient history, but we'll go to December. The S&P 500 and the Dow were down 10% in 1 month, 2018. What did Trump do? He forced Jerome Powell, the Fed head, to lower interest rates. But markets skyrocketed. What happened? Oh, remember the repo crisis? Oh, no, we forget about that. Oh, that was in September 2019 from artificially propping up the markets. Let's go back to the COVID war. Trump called a state of emergency in America on March 13th, Black Friday, 2020. What did he do? Pump trillions of dollars into the economy and force the feds to lower interest rate to zero to artificially boost up the economy. So going back to the markets, I believe he's going to lower interest rates. If he lowers interest rates, the lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go up. And again, right now with Trump in, came up, the dollar got strong again. It hit like a year high. So that's the story. You don't know what's going to happen, but that's if he keeps playing the same cards he's played before, that's the bet.
The BRICS bloc continues to make waves on the global economic stage, with one of its members, India, projected to achieve the fastest GDP growth among G20 nations in 2024. With a robust growth rate of 7%, India leads the bloc's impressive performance, highlighting the potential of BRICS nations as economic powerhouses. Indonesia follows with a growth rate of 5%, while China, another key BRICS member, is expected to grow by 4.8%. According to Russian President Vladimir Putin, this surge in economic momentum underscores the rising influence of BRICS, which collectively surpassed the GDP of the G7 earlier this year. The group's ascent attracts interest from numerous nations, many of which seek membership, further solidifying its role in reshaping the global economic order. While BRICS nations like China and Russia have demonstrated resilience by becoming more self-reliant in the face of external pressures, the United States appears to be grappling with stagnation. Gerald Celente, founder of the Trends Research Institute, observes that political divisions and a lack of cohesive economic strategy have left the U.S. struggling to maintain its position as the world's dominant economic and geopolitical force. Let's get back to the interview.
Again, the Trump picture will change by lowering interest rates, and that's going to bring the dollar down. When the dollar goes down, gold goes up. And this is the world has had enough of the United States hegemony, economic and geopolitical. Look what just happened in Peru. They built this huge port for shipping. Huge. China built it. So, yeah, China's going to do less business with America because of the, 60% tariffs that Trump is going to dump on it. But they're going to South America. They're spreading through Asia. They're spreading through Africa. The BRICS are real. It's the beginning of the end of the United States hegemony. This country became the country that our founding fathers fought against. Great Britain, where the sun never sets on the British Empire. Oh, by the way, Trump is going to increase the defense budget. Mr. Piece of crap if you increase the defense budget. It's like $1 trillion, over $1 trillion when you put in the CIA and everything else. Anyway, China is spreading around the world. The BRICS have had, as I said, enough of United States hegemony. We became the country we hated, the UK, but here's why. The sun never sets on the British Empire. You have to say it properly. You have to speak properly when you're killing people and stealing and robbing. They destroy their economy with all their wars. End of story. The economy died because of their wars. Go back to World War I. After World War I, the pound collapses and the dollar gains strength because America was skyrocketing. We became the UK. All our wars, the countless hundreds of trillions of dollars spent since the end of World War II. There once was a man by the name of Dwight D. Eisenhower, 5-star general, Supreme Commander of the Allied Forces, 2-term American president. He warns the American people, this is a real man, that the military-industrial complex is robbing the nation of the genius of the scientists, the sweat of the laborers, and the future of the children. Here we are. You should see how rotten this country's become. The roads are all potholes everywhere. Bridges are collapsing. Go down to New York City, and I'm a city guy. Homeless people everywhere. People drugged out in front of you. Garbage all over the streets. People afraid to go out at night. I'm down the city I'm up in Kingston, New York. This is the first capital of New York State. And I'm about 90 miles away. I'm down the city last week. I ain't getting the cabs. I keep asking the cab drivers, what's going on? 12:30 at night, New York City's dying. When I was a young guy in the city, we were going out at 1 o'clock in the morning. 12:30, older people my age, nobody out at night anymore. Only younger people. The thing's going down big. And again, going back, they've had enough of America, and America's destroying itself. So yes, I believe there's going to be, at some point, the dollar's not going to be the major currency anymore. But again, it has to be a new currency, a BRIC currency, because China ain't going to make it either because they destroyed their country by their 3 years of zero COVID policy. And I want to make this clear too. I believe countries have to become more self-sustaining. Look what happened with the Russian war, with the Ukraine war. Biden and all these countries put strict sanctions on Russia. Companies fled out of Russia. What did Russian people do? They took over the companies that left. The GDP went up. No, they didn't die. They became more self-sustaining. They have the human and natural resources to do so. So too does China. And so too does America. But America's so dumbed down now, it's just pathetic.
Gold's outlook remains a balancing act between geopolitical uncertainty, central bank activity, and shifts in U.S. economic policy. While supportive factors like rate cuts and long-term inflation concerns favor gold, short-term market reactions and dollar strength introduce volatility. Understanding these dynamics is crucial for navigating the evolving financial landscape. How can investors best position themselves to navigate the dual impacts of immediate market reactions and long-term trends in precious metals? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.